With Bitcoin and crypto recently reaching all-time high, a lot of beginners and new investors are entering the space, which is great for the crypto industry, but at the same time I see a lot of beginners making a lot of mistakes that can easily be avoided. And that's why today I want to share with you mistakes crypto investors should be avoiding. Mistake number 1, becoming a FOMO investor. Now I see a lot of people, they read the news and they see, wow, Shiba Inu or Dogecoin is up, I should be investing, I can get 100x. If you're one of the early investors, great, you can really cash in. So when you read about it in the news, that's already when it's way too late and the stock most likely will tank or collapse. We've seen this not so long ago with one of the coins extremely hyped called Internet Computer, which really started extremely high, it was promoted so heavily. And once the investors went on board, it completely dropped off big time and hasn't come back ever since. So this is the same what can happen to a lot of other coins. Dogecoin, for example, very popular now, people talk about it. You know, if you started early on, great, you really made your money. But when you read it in the news, it was probably around over here. And since then, it's just been dropping off and hasn't reached an all-time high once again. So it just shows you, make your own informed decision and don't follow blindly the crowd, because that's never a sound strategy for investing. Second mistakes people make is thinking that the price is expensive or cheap. This is true for both stocks and coins. The price of the stock or coin is just one part of the equation. Important is market capitalization. That's the total value of a company or of a coin. So in the case of Bitcoin, people may say, oh, that's very expensive at 52,000 euros per coin. But what you really should be looking at is the market cap, which is around 986 billion, so close to 1 trillion euros. And how you calculate this, you take the price of 52,000 and you multiply it times the circulating supply, which currently has 18.8 million coins out there. So this times that gives you the market cap, the total money in that coin invested. So when I compare that market cap, which makes it the most valued coin in the crypto sphere, it still is only 1/10 of gold, because gold currently sits at around 10 trillion. So if Bitcoin becomes the new digital gold, so then one day it naturally has to go to 10 trillion or more, which means it will grow by 10x, and that makes 52,000 become 500,000, because 52 times 10 is 500,000. So 500,000 or more in the future. And don't forget, you can own partial coins. You don't have to buy one coin for 52,000. You can buy a fraction of a coin. You can buy 10 euros worth of Bitcoin. Just looking at that doesn't mean it's expensive, even though the price says so. So when I look at Shiba Inu, for example, it looks extremely cheap. As you can see here, how many zeros after the comma? So it looks extremely cheap. But at the same time, look at the supply. I mean, I don't even know how many billions that is. A lot of billions of these coins are being issued at a very low price, which still brings it to a market cap of 30 billion, making it the 10th most valuable coin in the world. Now, for me, that looks expensive, because I don't really see the fundamental value of a Shiba Inu coin other than the fact that it's now trending and people talk about it. But I personally question the actual utility. So for me, that seems more expensive than buying into Bitcoin. Mistake number 3 is following price predictions. Now we all like to read about in the news on Twitter when people say, wow, Bitcoin is going to reach 1 million in a few years, or Ethereum is going to reach 10,000 by the end of the year. That's great, because obviously we invest into these coins and we want them to grow. And that narrative over time should become a self-fulfilling prophecy. That's great in reality, but nobody can predict the future. As much as it can go up, it can also drop, because there's so many factors out there. It's such a new investment asset with a lot of uncertainty attached to it. If they introduce new government regulations banning crypto, then all of a sudden it will drop to zero. So there are a lot of questions, so really don't follow blindly price predictions just because you read it somewhere or some YouTuber said about it that it will come true. So make your own research, do your own homework, and then invest into the long term. One important advice I want to give you: please only buy crypto during the day, because otherwise it will be your kryptonite. Mistake number 4 is holding too many coins. Now when I see beginning investor, they show me their portfolio and they have 20, 30 coins in there. They think it's great because they diversify their coin holdings. Now diversification is great, but when it comes to coins it's different, because you need to actually understand what the coins are doing. And each coin by itself is extremely dynamic. If you just invest in Bitcoin to keep up with the development and news and things that are happening, will take a lot of time by itself. Because contrary to the stock market, which only operates Monday to Friday, even on public holidays they're closed, the crypto market works 24/7, 365 days a year. So there's always actioning, there's always price volatility going up and down, there are always new developments, and you need to stay on top of the action to really know what's happening with your investments. So if you have 20 coins, it's just impossible. Even experts who know a lot about it say they don't know everything about it, because things are so dynamic. So personally, I hold around 6 coins. And I think that's already quite a lot. And all of the 6 coins are part of the top 10 biggest coins in the world. Some of them I would call blue chip coins, because they have a proven concept that they work over a longer period of time. Mistake number 5 is only holding one coin. So that's the flip side of holding too many coins. I see people being so certain that the one coin is the one coin that's going to make them a millionaire. They invest all of their money into the one coin, which is great if it's Bitcoin or Ethereum, which again has proven itself over the years. But if you put all your investment into a meme coin, it may go up and you may make a bit of money in the process, but it may also go completely complete to shambles and you lose all your money. So unless it's a blue chip coin that you invest your money in, which is okay, don't think you're the smartest person finding the next Bitcoin and making you the next millionaire. Sounds great, but in reality is highly unlikely. If you want to gamble a little bit, take smaller amount and invest in some of the altcoins, great, because it has potential and I think there's nothing wrong with this. But the majority of your money that goes into crypto should go towards the blue chip coins such as Bitcoin and Ether. Mistake number 6 is investing money that you actually need. As I said, crypto is extremely volatile and it can go down for a number of years. Even Bitcoin had up and down over the years. If you invested and went up, you were happy, it was great, but then it dropped for a couple of years in a row. And imagine you would have needed that money to pay for your mortgage or your kids' education. You would have sold at a loss, and that's the worst thing you want to do as an investor. You want to sell at the peak, not at the bottom. So really only invest the money that you can actually afford to lose. If you invest money that you need, you will have to liquidate and sell in a moment when it's the bad market timing, and that's a terrible thing to do. So make sure you have money set aside to cover those expenses, and the balance that you don't need, you can really invest and play a bit with it. And don't forget, crypto is extremely volatile and very risky, much more risky than ETFs or even stocks. And worse is using margin trading. On some crypto exchanges like Binance, they allow you to do margin trading. That means you invest €1 and they will match it with another euro. So if you make €1 in gains, you actually make twice. You will use a leverage. So you're not using your own money, you're putting €1 of your side and they match it. You can make much bigger gains in the process. But on the flip side, if it goes down, you're also losing twice as much and you can be liquidated. Your account can be closed and you really have big liabilities towards these brokers. So it's extremely dangerous, risky, and I really advise you against using margin trading. Mistake number 7 is sending funds to the wrong address. Now I know it sounds pretty silly to even talk about it, but it happens so many times that people make a mistake when they copy the numbers and send it to the wrong wallet address. Because contrary to the conventional banking system, where it's very easy, you have a lot of parameters such as the beneficiary name, the address, the IBAN number, the BIC, the SWIFT number. There are a lot of details there. In case even one detail is wrong, the payment is stopped or you can revert the payment. Sending cryptos, these things don't happen. All you have is one wallet address that you send it to. So for example, on Etherscan, you can see transactions that are happening in the moment. So we can look at anyone's wallet. So let's open this over here and you can see this is an Ethereum address basically. So if I wanted to send this person money, I can either scan the QR code and it will pull it up in my wallet. But what I personally prefer to do is copy that. And then let's say this is my address from where I send it to. I will copy it in and then I will double, if not triple check the address. I will check the first 4 numbers and digits and the last 4 number and digits to really make sure they match up. Because if there's one small mistake, that money is gone and you won't be able to get it back. And usually I send a smaller amount first, see if it went through, and then I send a bigger amount. Because I can tell you, if you ever transferred money from one crypto exchange to another, it sometimes takes a few minutes and you send a big amount and all you can do is wait. These are some scary moments. So really make sure you take the time to double, triple check these numbers because this is super important. Not only that, you also have to make sure that you send the right currency to the right currency wallet. Because if you send Ethereum to Bitcoin, it doesn't work. That money will be gone. So you need to make sure that you get the right coin and the right wallet address and then deposit or withdraw accordingly. And lastly, avoiding scams. Now, because crypto is going through such a boom at the moment, it naturally attracts a lot of money and money attracts scam artists. And there are a lot of them out there. Probably even under this video is going to be some bots commenting about joining their Telegram groups. I see this time and time again, especially when you look at bigger YouTubers or bloggers or Twitter accounts. There are so many bots out there trying to get you into their groups, into their Facebook, WhatsApp or Telegram group, promising you crazy returns. Again, as we said before, luring you with FOMO, promising you 100x return by investing through them. So you end up sending the money to them and hope that you get 100x return in the next 2 months. But of course, what happens? The money is gone. So be very mindful, use common sense, and be aware that a lot of scam artists out there. So make sure you really invest into things that you understand, that have a proven track record, and that you can truly trust. And the last mistake I see a lot of people doing, and that's a very important one, and that is not subscribing to this channel. So please make sure to avoid this mistake. It means a lot, guys. Thanks very much. I hope you found this useful. If you did, please give it a like. Next, check out the video over here. Thanks so much for watching, guys. Stay blessed, stay awesome, and I'll see you in the next one. Take care. Ciao, ciao.